You must flip $80 to $4,000 if you delete every single candlestick pattern. And learn this 3 hidden flipping candlestick pattern because they won. Give precise sniper entries 2. Have 87% win rate. 3. Works every day. All in all, in this video, you'll be learning how to go from just getting little profits to getting 100x more just by changing some things in this step-by-step order. Starting from the basics, which is 1. The 2 things candlestick consist of, and 2. The 4 things candlestick signifies. Candlesticks consist of 2 things, which is 1. Candlestick body, and 2. Candlestick wicks. The body is literally how it sounds. It's like a cloth or shell to cover the nakedness of a candlestick, which is the wick. And this can be in different size. Most times it's at the top, sometimes at the middle, but majority of the time it's almost full. While 2 candlestick wicks are long or short line found in the middle of a candle in a candlestick chart, and this indicates where the price of a stock has fluctuated relative to the opening and closing prices. Essentially, these middle shadows or lines illustrate the highest and lowest prices at which an asset has traded over a specific time period. All in all, candlesticks just literally shows data of what happened in the past and what might happen in future. With that said, these are the 4 things candlesticks signifies. 1. The opening of price. This is basically the high of every bearish candlestick, or the low of every bullish candlestick, which by default is a green candle. But just in case the color is different on other chart, because some people change their candlestick color. You can still know a bullish candle by just looking for the candle that's breaking highs instead of lows. And this also works even if all candles are the same color. Like if you observe carefully, you'll see that some candles were breaking highs, or just giving an upward direction, while some, on the other hand, were giving downward direction, or just quote-unquote breaking lower structures. But even if this is still manageable, ensure to make your candle within this color range 1. Green for up, gray for down 2, blue for up, black for down. Doing this will make you stress less psychologically because this color schemes are kind of chill or let's say non-threatening, compared to red and the likes, which signifies danger, bringing us to 2, the close of price. This is basically the low of every bearish candlestick, or the high of every bullish candlestick. So if you're on a 1-hour time frame and price closed at 1.2345, this signifies that was where price of an asset ended within the past hour. Or to break that down much more smoothly, if price opened at 8 a.m., and this was the 8 a.m. candle, then wherever the body of this candle ends at is the close of this candle. Like if it ends at 120, then 120 is the close. Or if it ends at 150, then 150 is the close of the candlestick. One side thing to note is that the close of a bullish candle is the opening of the next bullish candle, while the close of a bearish candle is the opening of the next bearish candle. 3. Highest point or lowest point. Candlestick's wick literally represents the highest and lowest point price got to within a period of time. 4. Volume and momentum. Candlestick signifies volume and momentum in the sense that you see the speed at which price moves, and this can help you distinguish between meaningful price moves and potential head fakes. Heavy trading volume usually indicates strong conviction behind a price move, while light volume can indicate uncertainty. So now we've covered the basics. What are the 3 secret strategies I used to take this $80 to $4,000? Number 1. Ceiling candlestick pattern. This is a candlestick pattern that utilizes the close and the opening of a wick to create something called order trap war. Because every opening of a candlestick has orders at the top, which is either most people trying to enter in form of buy limit or buy stop orders. One way or the other, people are always trading. This ceiling candlestick strategy also used the close of the wick to trap traders. and I'll teach you later how to exploit it. They trap traders when they try to sell again to caught any counter trend setup, signal illusion they see on their indicator, or whatever strategy they trade. Essentially, this is when institutions pushes their buy orders to sell orders to try and liquidate all those selling so they can have less ops that try to slow price with sell orders as they reload buy orders to take price back up. And this happens. On every chart, there's always a war. And one form this war takes is like when price is creating highs and lows and the retailers choose to sell high and buy low, or do the opposite, which is buy low and sell high. That said, what I really want you to understand is that after this war, there must be a breakout and a trap. And your whole aim with this candlestick is to be in the middle of all this, so you can get sniper entries as price liquidates them. So you want to look for a candlestick formation that's signifying that traders are selling high and buying low multiple times. Candlestick like 1, hammer pattern, 2, harami pattern, 3, harami cross, and many more. But what works best on this ceiling candlestick structure is candles that have long wicks with the body at the middle. From anatomical view, it looks something like this. But if you convert it to candlestick, it would translate to this. The candles are never full, because that's showing one direction, which is when price is going up rather than what we want. Which is when price is consolidating. The candle must be at the middle with long wicks signifying indecision, which is when price have no direction to go. Instead, it's just ranging because people are gambling below and above it, trying to make quick profit. And when you see this indecision candle, you want to at least see both bullish and bearish indecision candle. If you don't see both, the setup isn't valid. There must be at least one of both, and 3 when combined. But mind you, don't be deceived by price shooting down or up after creating this range, because it would still come back up. So you want to wait. And when it eventually comes back, don't just enter ASAP. Instead, you must wait for it to give you another wick entry. Not only on this time frame, but on at least 2 different time frames. Like on 1 hour time frame, you can see how price respected at least 2 wicks. But mind you, it must be at the tip of the wick. Same with 30 minutes time frame. It must respect at least 2 wicks and trap all those orders between that tiny line. As it did also on 15 minutes time frame. Everything was perfectly distributed on 1 hour time frame, 30 minutes time frame, and 15 minutes time frame. With this confluence altogether, I got my first major flips, closed and applied the next secret strategy on the second trade, which I call 3 candle formation theory, which as the name goes involves 3 candles. If it's green, it should only be green with no red, or down candle in between. And if it's red, it should not have any up candle forming as the second candle. Instead, it should only be 3 red candles. And the theory of this 3 bullish or bearish candlestick strategy is that when they form in this 1, 2, 3 order, the next candle that's going to open tends to always be a reversal candle. Or let's just say it's always the opposite direction. So, if you have 1, 2, 3 bearish candle going down, what happens is that the next candle always tend to be a bullish candle, which goes the opposite way. It's like a form of manipulation. Because institutions know that most candlestick traders tend to gamble price action. That looks consistent. And guess what? 3 is a lucky number which they can't resist. So they use this information to brutalize all you trader looking to make consistent, easy money. And this has happened consistently over time. It happened here. They give you a very good pattern, making you set your entry and stop loss, and then they whoop you real hard. Not once, not twice, because you don't understand the manipulation going on. But that said, don't make this minor mistake of thinking, this is where the 3 candle formation starts from, and start marking it from here. Because if you do this, you'll lose 80% of the time. Instead, to make consistent profit with this strategy, you want to do this 3 things. 1. Make sure the marking of your 3 candlestick formation starts after price breaks out from either a 1 breaker block, 2 support zone, 3 resistance zone. Second thing to do, so this 3 candlestick formation work, is to make sure the previous candle created a consolidation phrase before the pops or moved smoothly and slowly. As for the third confluence, your middle candle must not be bigger than the first, because from series of studies I have conducted in the past, this kind of abnormally always leads to multiple consistent loss. That combined, you would have made insane profit like I did here before. I executed the third candlestick trading strategy, which is 2, the law of 50%. This strategy is basically you selling or buying at 50% of a candlestick. And anatomically, it looks this way. Price going up, then down, then up again, before price then pulls back to 50% of all this candle range, and breakout following the direction of the trend. Funny enough, the type of formation the candlestick have when the 50% pullback happens doesn't matter. Like for this schematic, you can see that it happened on an almost full candle, a candle that the body is, and also a candle that the body is very, very tiny that it's barely see-able. That said, these are the 3 things most people do to make this strategy not work. 1. They buy or sell when they see only one 50% candlestick confirmation and think price would respect their entry. To really get the best out of this 50% strategy, you have to make sure you buy not only when you get 1 or 2 candlestick confirmations, but with 3 or more, because this increases win rates 2 to 1. Although this strategy works 70% of the time alone if traded religiously, you can up your win rate to 90% by adding the first 2 strategies to the equation. Like let's say you see one 50% candle formation forming. You want to make sure the ceiling candlestick pattern is active too. Like it should pop up next to your 50% candle formation and be at the up tip if you want to sell, or the down tip if you want to buy. That said, you should also uphold all the trading plan, or do's and don't on the ceiling strategy while pairing both strategies. If possible, make the ceiling strategy candle more than 1, so as to top the win rate the more. Or add the 3 candle formation to the equation. Like make sure the second candle isn't bigger than the first, wait for the pullback to the 50%. And if you've done that, you'll have gotten a splendid trade. If you traded all this 3 strategies and uphold all their rules. 3, most people don't really win using this strategy because they don't leverage and stack more positions. And how you do that is by firstly having a good broker, like 1, Xness, which offer unlimited leverage, which makes you capable of opening any lot size so you can risk all your profit from your first trade on the second trade, so as to create some kind of compounding effect. Or 2, JUSTMARKET broker, because they have excellent and low spreads. And 1, 3,000 leverage, which is more than enough. That done, this is how you leverage on this move and get the highest profit you possibly can from this move. To get the highest profit, you want to leverage on minor pullbacks. Like if you look at this move here, you can see that price creates a breaker block here. And then what happened? It retested. Created another one here. And what happens? It retested again. Showing this strategy works, so you want to exploit it when you see it the 3rd time. So I entered, maxed my lot size. And in a few minutes, I was up in profit and had to close. For more educational content, check link in description.